What's up, family? This is your boy Ivan Hall, the Credit King. Here are a few tips for getting a personal loan with bad credit. Personal loans may help you with everything from unforeseen emergency costs to credit consolidation. The restriction here is that you must first qualify for a loan before you can obtain one. A personal loan may not demand collateral such as a vehicle or house, but most lenders have minimum credit standards that you must achieve in order for your application to be granted. Personal loans are often repaid in installments. This implies you will repay the entire loan amount plus interest over a certain period of time. If you have terrible credit and are approved for a loan, you will most likely be charged high interest rates, which means you will pay even more for the loan over time. Before applying for a personal loan with negative credit, there are several factors to consider. By asking yourself these questions, you may be able to determine the type of loan you qualify for. Alternatives to more conventional methods include loans from national financial institutions, banks in the community, credit cooperatives, online lending experts. Keep in mind that traditional methods, such as banks, have tougher approval standards. Some credit unions may have lenient lending policies for their members. Credit unions may also provide better conditions for persons with bad credit than other loan choices. If you need a personal loan with terrible credit, a credit union is a fantastic location to start your search. Online lenders might be difficult to work with. While there are some respectable internet lenders, there are also numerous offers with excessively high interest rates or other tough stipulations that may make repayment nearly impossible. Before agreeing to provide you with a loan, most respectable lenders will examine your credit score. When they do so, you may discover that your credit score varies depending on where you apply. This is due to the fact that scores vary depending on a few factors. For example, the score will differ depending on the scoring model used. This is often the FICO or Vantage score models, each of which has several distinct versions that a lender may utilize. Some businesses may use their own internal model to estimate your creditworthiness, but they may not provide you with a score. The usual score runs between 300 and 850. A lower credit score will make it much more difficult to get numerous personal loans. This does not stop you from obtaining a personal loan. A lot of lenders specialize in working with consumers who have terrible credit or no credit history. However, keep in mind that the loans you may be eligible for are extremely high-interest loans. The first thing to address is if the loan would improve your long-term financial status. A typical example here is utilizing a personal loan to pay off high-interest credit card debt. While this will not eliminate your debt, it will save you money on interest if your loan interest rates are lower. Other circumstances, such as covering unexpected needs, may necessitate obtaining a personal loan with negative credit. It is critical to compare loan conditions, and fortunately, doing so is straightforward. Comparing loan conditions is especially crucial if you have negative credit because the terms on a loan for someone with bad credit might vary greatly from lender to lender. Before looking at the lender's conditions, learn about their reputation. If something appears to be too good to be true, it probably is. Check the Better Business Bureau for particular loan information. Then compare to locate the most trustworthy lenders to pick from. The annual percentage rate, or APR, of a loan, is the total amount you pay each year to borrow money. It is calculated as a percentage. A lower APR implies the loan costs you less in the long term. Monthly payments are the amount you will pay each month. It is critical to ensure that the monthly payments on a loan are manageable. Payback term, the loan repayment period is the time frame in which you must repay the loan. Most loans will ask you to make fixed monthly payments for a specified payback period until the loan is paid in full. Minimum and maximum, find out what your typical minimum and maximum are. Lenders will decide how much they are willing to lend you and how much they are not willing to offer you. This may assist you in searching for the most beneficial conditions given the loan amount, as well as eliminating lenders that will only lend you too much or too little money. While technically a personal loan is a payday loan, it's one of the most unfavorable loans available. While it may be tempting if you need money urgently, a payday loan is only suggested in the most severe cases. In a nutshell, a payday loan is a modest loan with extremely short terms and a very high interest rate. The loan itself is generally for a little amount, up to $500. You then repay the loan with interest on your next payment. It appears simple enough, yet the costs charged by these companies are astounding. Simply put, payday loans are dangerous, damaging, and almost never worthwhile. This little cash would be better borrowed from a buddy. Loan rejections are an inevitable element of obtaining a loan with weak credit. Don't give up if you're rejected for a loan. You might browse for other lenders who provide comparable conditions and apply for a loan with them. You might also just desire to enhance your credit score. Your credit score might improve over time as you make on-time payments and pay off your bills. This might open up a new world of lending, allowing you to take advantage of lower interest rates and other payment conditions.